right, welcome back to the Phoenix Founders Podcast. I'm excited to have Kentaro Kawamori with Persefoni today. Kentaro, how you doing?
Doing really well. Thanks for having me. It's good to be here.
Yeah, thank you so much. I've watched your journey a little from afar. I'm sad I'm not on your cap table. I'm very, very sad about that.
We can fix that.
Okay, well, let's work on that. Yes, I like that.
You might not like the pricing, but we can fix it.
Sourcing deals here on the Phoenix Founders Podcast. Hey, I always want to start with our guest and hear a quick overview of who the company is, and then I'll jump back into your upbringing and your past. But tell us a little bit about Persefoni, what the company does, and what you're focused on.
Of course, Persefoni is an enterprise SaaS company. We've built what we call a climate management and accounting platform. So we help companies calculate their carbon footprint and then manage their climate estate after that. So, of course, reducing the carbon footprint, but now getting into new areas like physical risk modeling, nature accounting, a lot of frontier areas in climate. So think Fortune 500 companies, big asset managers, banks. We've got almost 900 companies using the platform today.
Wow.
Across the world. We've got most of our revenues and customers sit in North America, and probably 20% Europe, 20% APAC.
That's incredible. Tell me about a couple things here. Let's start with your background. Was there anything in your background that indicated you would, one, be an entrepreneur, and then maybe two, even in climate tech?
Yeah, I think a lot of my early upbringing was super influential in my entrepreneurial journey. So I grew up in Germany mostly, so I'm half German, half Japanese, and grew up in a small farming town, which gave me anybody that comes from the Midwest, for example, or comes from non-urban environments knows how desperately you want to get out at times. So it gives you a really strong drive to get out and do bigger things. But I also grew up playing hyper-competitive soccer, football as we called it, and playing football in Germany is more like a religion than it is a sport. So
was your family a farm family?
They were not. No, we just happened to. Germany's got a whole bunch of small villages,
yes.
And the area we grew up in is kind of the breadbasket of Germany.
So I'm just going to guess that you are knowing a little bit about you and your background, and then also the soccer overlay. I'm going to guess that you're like top 1% on like competitive spirit.
It's interesting, because people love to say when they're very competitive. I'm very competitive on certain things, but the classic like, oh, I can't sit down and play a board game and be non-competitive or not be over-competitive. That kind of stuff I'm not very competitive on.
You don't care.
If it's something I'm all into, yeah, absolutely.
You refuse to lose.
Then it's 1% or nothing, for sure. Yeah.
Awesome. Take me back to the beginning of Persefoni and where the idea came from. I'm always interested in how someone got the idea and then the transition from where they were to where they are now.
Yeah, I spent a good chunk of my corporate career in big IT, so both sort of in the enterprise software channel, and then ended up at Accenture doing big digital transformation consulting. And I ended up working for one of my clients as chief digital and information officer. And I was 27 at the time. Somebody said, "Hey, do you want a CIO gig at a Fortune 500 company?" And I said, "Yeah, sounds great. But you got to move to Oklahoma City and work in oil and gas." And boy, that was a departure from what I thought my life was going to be. But yeah, so I ended up working at Chesapeake Energy, and if you're a basketball fan, you'll know them from the arena formerly.
Yes.
And big natural gas producers, what they were known for. And surprise, surprise, you produce a lot of natural gas, you produce a ton of emissions. So
yes.
We're what's called a hard to abate industry we were in, and so there's a few industrial industries regulated by the EPA that have had to do some form of carbon accounting or calculating and sharing the footprint. And that's where we first discovered the problem that we're solving.
So 2 questions on that. Before you were at Chesapeake, you were in consulting. What did you study in your undergrad?
Boy, I had a very non-traditional undergrad. So I took a year off after school, worked in some small businesses, really sort of learning that from the inside out. And then I came back to Arizona. I ended up triple enrolling at NAU, U of A, and the Pima Community College down in Tucson, because I had to hack my way through, because I ended up doing, it was something ridiculous, like 120 credits in 2 semesters or something nutty like that. So yeah, that was kind of my weird undergrad.
I didn't know that about you. So you You were like 24/7 student.
Coming back to that all or nothing thing, right? I couldn't sit there and go through school. I always hated school. Like it was just, I would just be itching on the side of the table trying to do stuff faster, and I couldn't do it. And so the only way I could feasibly get through school was just to overload myself and do it, all in. And it was a combination of like testing through a bunch of classes and then, playing the universities against each other on there's all these limits. They won't let you take above a certain amount of credits, which is why I had to do that.
Yes.
And ended up graduating NAU because NAU ended up giving me a scholarship. So I ended up making money doing that. It was great.
That was great. I love that. And then, and what was the program of study? Were you in?
Oh, yes. Yeah. Your original question there.
Information systems or something like that?
No, it was like a general. That's pretty sad, isn't it? That I don't even.
No, it's not sad.
Bachelor of Science and Interdisciplinary Studies.
Okay, so, but then but you clearly were able to move into consulting and then become the CIO at Chesapeake. Yeah. So you must have had a real affinity for technology.
Yeah, technology was always self-taught. I've always been a massive gamer, and so like so many other entrepreneurs, grew up hacking my own computers together and throwing LAN parties. That was our definition of a party. Rather than getting the 30 rack of beer, that's what we were doing. This was before the advent of online gaming, of course, and so I've been building my own computer since I was like 11 or something like that.
So before we get into Persefoni, I want to ask a little more on the background here. So tell me about the relationship between gaming. I mean, there are a lot of people that game broadly, but it does feel like there's a lot of entrepreneurs that game. And then also, why were you building your own computers? Was it just because you wanted more firepower than you could get
definitely
off the shelf?
It was also cheaper. Right? Like, I didn't grow up with any money, so hacking your own components together and salvaging stuff was a way to get more horsepower.
Yeah. And then what was your game of choice?
Oh, man. I was in the early PC gaming days, thanks to Microsoft really kicking that off. It was real-time strategy games, so like the StarCraft and Age of Empires. That's what I credit a ton for a lot of my strategic abilities in business. It's a lot of like multivariate, multilateral thinking where you have to make a bunch of decisions that have to do with resource accretion, development, like real-time engagements. To this day, I encourage parents. I'm a father. Put your kids in these games. Like the old era of games are fantastic for that sort of brain development.
Yes, and anticipating a wide array of outcomes, right? Like making choices and being open to a wide array of options, and then making decisions on the fly in response to those outcomes is hard to build that skill in your youth, actually.
Exactly, and a little remembered fact. So if you draw the parallel of teaching a human, whether it's a future entrepreneur or a kid, skills, you might remember. You remember the Google AI labs. Probably about 10 years ago, there were two gaming applications that they were training the models on. One was Go, the ancient Chinese game, and the other one was StarCraft. And so, to your point, the complexity in those games and the level of outcomes that are unpredictable and just require inference and quick decision making. Yeah, it's a real thing.
Incredible. Well, let's fast forward to the Chesapeake experience here. What was it? Because if I remember correctly, there was something specific that occurred at Chesapeake that gave you the idea for Persefoni.
Yep. Yeah. So it comes back to that EPA reporting that we had to do, and one day I stumbled on, it was just a spreadsheet, a bunch of numbers that just came up with these gaseous components and things like CO2e and nitrous oxide and all these things. I didn't really know what they meant. Methane flaring, you may have heard, is a big thing in oil and gas, and that's the reason the EPA had created under the Obama administration these emission rules, and it was mostly companies in the petroleum chain or chemicals chain. And I stumbled on the spreadsheet and saw this just crazy amount of data, crazy amount of calculations that were being performed, and I asked the questions, how are we doing this? Like, where does this come from? And the answer was, well, it just comes from the spreadsheet. And the EPA provides it. And so I just saw all the classic, sort of gaps that software is so well suited to fix. Data variance, different source systems, data governance and lineage issues. And so, the heart of Persefoni is a system of record. You can think of it almost like an ERP system for your carbon and climate data. And that's really some of the big IP that we unlocked early in the journey is we really took a different approach and solved a hard data problem first.
Because there's probably a combination of both data and workflow involved. I'm guessing there were all these manual workflows you saw at Chesapeake, not just the spreadsheet, but probably all these manual workflows that required action, reporting, inputs and outputs here.
Exactly, and that's a lot of the focus going forward, right? Is like there's the core accounting capability, and think of that very similar to financial accounting. You got to count your beans, and then you got to figure out where the beans going and where you're putting them. But then, what do you do with that? So think about like what an FP&A tool does for ERP systems. Allows you to do planning and variance analysis. Think about what expense systems have a very specific use case that sit on top of that. Very similar for us is all these new workflows, some of which we've already built, many of which we're still going to build, that enable those additional use cases.
So when did you? You left Chesapeake, and then you came back to Arizona, I think, at that point, right?
Yes. Yep.
And then were you at ASU for a while?
I did my MBA at ASU. It was like 2013, 14.
Okay.
Yeah, that's where I met my wife. So that's what one of the reasons that brought us back here.
Yeah. And then you did you start the company while you were in school?
No. We started Persefoni in 2020.
Okay.
Started another company in 2019. Thought I was going to be a venture investor for a little while. So we led some seed and Series A stage deals with a great family office that led Persefoni's seed and Series A.
Interesting.
Yeah. And so, quickly realized after we did 4 or 5 deals that I wouldn't have the ability to sit on the sidelines for the next 10 years.
Well, look, to be clear, having been on both sides of the table, your side of the table is way more interesting. I will say that.
I think it ebbs and flows, right? I think for me, it's just the everyday nuttiness that is building a company. Kind of that all or nothing that's the stimulation I need every day.
Yeah, no, the nuttiness of company building is something, to use your words, I want to drill down on here in a minute for sure. What was so you start Persefoni in 2020. I did want to ask you one thing. In 2020 and 2021, it just feels like ESG became way more focused for institutional investors and other people. Has that been a tailwind for you, and how's that evolved today?
Yeah, massive, right? When we started the company, that was, the proliferation of net zero targets was one of the reasons we thought there was actually going to be a market here for the first time. We saw a technology and a business problem, but we didn't actually see that it would be scalable as a company yet. And so the bet we made was that would trigger, a whole bunch of other action by institutional investors and then regulators to create some sort of standardization and parity in this space. And, to provide, parity in reporting, you need to have software to go do that. And so that was really our thesis in that. We started in January 2020, and Larry Fink wrote his CEO letter that year where he said, climate risk is financial risk. And you might remember, now he's gotten a bunch of flack for it, and he's reversed course, but his CEO letter was all about climate change in 2020. Yeah. And that really started a huge, avalanche of capital market activity in the ESG space. And just like technology, whether it's GPT, AI hype today, right? It definitely went into a bubble of overexuberance, and it's pulled back a little bit, and now it's being renamed and reworked. But growth has been consistent, right? This is one of those things that people aren't going back on. They may call it something different, but growth has been prolific and will continue to be in the space.
Has there been, and because of that, some of the ESG focus, has that translated into regulatory framework that's been constructive for you? And I know we're talking about regulatory framework. You're a global company, so you're probably dealing with global governance at a scale probably most of us don't see. But I'm guessing you're dealing in a regulatory framework that is unique in every country.
Yes and no. So it's really interesting. The closest parallel that you can draw is what happened in the data privacy space. What is that, 7-8 years ago now?
Yeah.
So you remember, we started talking about data privacy. It wasn't really a practice any company had. Then the Europeans come along.
GDPR.
GDPR, exactly. And then California copies them, right? They say, okay,
right.
CCPA comes out. And there's many multi-billion-dollar companies that were minted out of this, providing solutions for this. Companies like OneTrust and Privitar. And, companies had to go from no data privacy practices to reporting this in a standard way. And in that instance, Europe and California basically set the global standards. Similar for us, the regulators have learned to collaborate a little bit better. And so right now, essentially the G7 came together, started creating standardization around ESG and sustainability reporting. They call that the ISSB, it's the International Sustainability Standards Board, which actually, if you're, again, comes back to financial accounting, the FSSB is what governs things like GAAP. So it's sort of the sister organization. So they've done a good job over the last few years sort of unifying these different standards. And then for us, luckily, in the accounting layer, there's what we call the greenhouse gas reporting program, and think of that like GAAP for financial accounting. So that's been well established for almost 30 years. It's incredibly complex, so it's, again, lends itself really well to software. But in the next 24 months, the state of California is rolling out, it's called the California Climate Disclosure Act. That has been written into law and will go into effect in 2026. Today, 0 companies in the U.S. are mandated to disclose their carbon footprint. California law alone will force about 10,000 companies to do that. And then in Europe, you have their own framework. Japan is coming out with its own framework in March or April of next year. Singapore, New Zealand, Australia. The list goes on.
It seems reasonable to every company is going to be subject, that this is going to be ubiquitous over time, where people are going to need to report, disclose, report, and then presumably remediate or manage their footprint at a global scale.
Exactly, and there's some real network effects that have started taking hold. So you've got some data. There's what's called the Science-Based Target Initiative, which is sort of the gold standard on how you set a net zero target. Right, so you have to set a year that you want to achieve that, and then they go and verify that in the beginning, and then every year. In 2020, there were about 80 companies that had a science-based target, and this is like a heavy process to go through and get certified. There's something like 6,500 today, and the majority of those are considered SMEs or small, medium-sized enterprises, and they're doing it because their customers are forcing them to do it.
Interesting.
So, Amazon, for example, goes into its supplier base and mandates new sustainability standards if you want to do business with them. Walmart, all these big companies. And so that's created a huge
network
effect.
Cycle.
Exactly.
Yeah, interesting. A couple of things that I loved on just what you said that I think is a lesson for entrepreneurs and others listening to this. It's interesting when you talk about Persefoni, you drew 2 parallels that I think are really powerful. Data privacy. So this is just like data privacy, which is a construct now that most of us are familiar with. Many of us may not be familiar with climate accounting or carbon accounting here, but all of us are familiar with privacy, data privacy. And then the second one is talking about an accounting system or accounting standards, including SEC reporting and others as a corollary here, which is really it seems quite obvious when you use those parallels that those of us that are familiar with.
Yeah, and you've seen this over time, right? I mean, remember when SOX came out and people thought the world was going to end, and all of a sudden you have to build all these controls and compliance, and how can we possibly do this? The technology doesn't exist, the business process doesn't exist, and SOX has been in effect for 20 years, and it's sort of just a thing that you do now. Data privacy, same thing, right? And so this is just the next iteration of that.
Well, and the cost of a SOC audit, to use that as an example too, has come way down, like relative to it's a competitive market now, and there's certainly strong incumbents, but yeah, no, that's a really good example of something too. Let me ask you about. Let me go back to something you said about the nuttiness of company building. Tell me about when you started Persefoni. You started it. What did the company look like in the early days? It sounds like you raised money from a family office early. I'm always interested in kind of the capital raising journey and how that translates to the company building journey as well. So what happened? What was the company like, size, scale, and all that in 2020, 2021, and how you got your first customers, all that early day stuff?
Yeah, so there was probably, a core of us, there were probably 8 to 10 of us in 2020 that we started the company. Not everybody started on day one, so I think in the first six months or so. I think we raised like $3-4 million that year. And then 21, we did our Series A. That was like mid-spring in 21. And, so we're less than a year and a half old, and we're probably 30 people at that point. We've always been super R&D weighted. So if you look back in hindsight during the venture craziness of 21 and 22, one of the key decisions we made early on is we would put the majority of our capital into R&D. So a public SaaS company spends on average 25% of its capital on R&D. We were always 50 to 60%, just for even today for context. So today we're about 140, still very similar split. Right? 50 to 60% of our resource goes into that. some of that has to do with the fact that our business model is evolving in the last 5 years too. We've always been direct sales, enterprise SaaS, and we launched a PLG motion earlier this year, which has been really successful. But man, yeah, I mean, my God, the whole venture world is, if I look back at 2020 and 21,
quite different.
It was dual for us, right? Yeah. Because you had the venture craziness, but we also had the ESG and sustainability craziness.
Yes.
So we had 2 hype cycles happening at the same time.
It was good to be you in 2021.
It was great. Look, we've been really fortunate. We raised a lot of capital from really great investors that are really long-term oriented, that supported that R&D strategy. And, I think I see a lot of founders, I see a lot of venture investors like overcomplicate how to do this. And what I mean by that is when I went to my investors, and same today, I told them our strategy is really simple. We want to build the best product, we want to have the best people, and we want to build the best brand in the space. And we're going to orient all decisions around those 3 pillars. And and that's something you could read out of a business book, but the reality is most people don't execute.
Well, I totally agree. Not only do most people not execute on it, they also don't speak with that clarity, which makes it hard to raise capital and get traction. Like, I think there's lots of investors looking for something to invest in, but they need, founders have to make their companies investable. And what you described is you made this investable for someone. I want to ask you a couple follow-up questions. Do you need to spend this much on R&D because there's a category creation aspect here going on? I mean, you're building a new product. There's not a lot of other patterns out there to follow. I mean, I know there are a lot of newcomers here, but I know it's a competitive market, but you seem like you were among the first out there doing this. Is that accurate? Am I reading the situation right?
Yeah, it's remarkable. There was, probably the 4 or 5 players that had some, level of recognition in our space with our buyers over the first few years, all started within 6 to 12 months of each other. And the amount of capital we've raised has been critical. I think it's an interesting balance, right? You can make the case that capital is an advantage, and you can make the case that it isn't. It just comes down to how you spend it and how, are you properly allocating it along the way. And if you look at us and our main competitor, have raised similar amounts. Their strategy has been hugely divergent from ours. It's been very sales and marketing oriented. Their business model is basically a tech-enabled service company, whereas we're a pure play SaaS company with, nearly 100% SaaS revenues. And for us, the building a system of records is very expensive, right?
Yeah.
We had to be able to meet, true enterprise grade requirements from day one. So, SOC 2 audits, weren't a thing that were coming in phase 2 or 3 for us. Like, we had to be there on day one. And
I want to ask you about the capital raising here in a minute, but going down, drilling down on a system of record, a lot of software people, when they build enterprise software and you're building a system of record in particular, data migration is a big deal because you're moving someone off of another system to something else. Is that an issue for you? Or I'm guessing a lot of the data is pretty disparate because are people I perceive that people are going from nothing, for the most part, people are going from no software, like they're going, like your Chesapeake experience, like going from spreadsheets, manual workflows, probably PDFs. But is that what's happening? Like, you've got a big complex system, but people are going from nothing to something. Is that right?
Yeah, overwhelming majority are going from spreadsheets or having never done it. And I don't think we've actually ever run the numbers, but probably over 60% have never done this as a practice before, which makes it a hell of a lot easier from that perspective, right? Because imagine building your books for a small business for the first time. You just do it on QuickBooks.
Yes.
Right? You don't try to do it on a paper ledger like some people still do. So that definitely helps, but the challenge we have is I've never seen a system of record in my life, genuinely, that takes in as diverse a range of data as we do. So take in everything from electricity, power consumption, to lease data, to commercial air travel, to private air travel, to I could tell you what the refrigeration consumption is on an industrial production line.
Yeah, that's fascinating.
And so, our average number of data sources that a customer ingests to do a full scope 1 through 3 footprint is 20 to 25, which is wild. Like, like data lakes in Snowflake might not have 25 different data sources.
How are you getting that data too? It's not like there's probably an API you can hit on most of these data sources. Like, how are you getting all this data?
That's the challenge, right? I always tell people, like, the climate data challenge is just the enterprise data challenge. So when there are source systems that are available through API, our customers plug those in, and we've had a full roster of APIs for a long time, but overwhelming majority of data, they have to export, do some sort of transformation, and then get back in. And so a lot of our innovation, a lot of our tool sets are geared at helping them do that more efficiently. Unfortunately, it's we're not going to be able to escape the spreadsheet and flat file world for quite some time.
Yeah. Well, that also creates probably some pretty serious lock-in. I'm guessing your retention's pretty high with all that, given once someone adopts a product like this and they build systems and workflow and reporting relationships, you do become a true system of record.
Yeah, definitely. NRR is above 100%.
Awesome.
And, that's, to your point, it's dual fold, is because, it's a system of record, one, which, as you know, has low churn rates. But then two, just the fact that we integrate not just into technical process, but business process as well. It's not fun to rip it out once you have it.
Yeah.
And frankly, one of our big things you mentioned earlier is, like, we want to make sure that every dollar spent with us is hugely valuable. Technology, and especially software, should be deflationary. And to do a carbon footprint with a consultant 5 years ago for a large company could be $200,000-$400,000. They can achieve some serious savings doing that with us today already, and the price is only going to keep coming down.
I love that. Let me ask a couple questions about just the capital raising, because you mentioned you raised a lot of capital here. I know one of your investors, and maybe there are others, but what did the Series A look like? And I think you said that was family office money here.
Yep.
And that's an interesting dynamic. I did something similar with my own company building journey, and then went more institutional. And there's pros and cons to both. But tell me a little bit about this timing of these capital raises and size, if those are public.
Yep. Yeah. So I cheated a little bit in year one, meaning our seed raise was done with the Rice Investment Group, who was the firm I was telling you about that I was actually investing with. And so we were actually looking to raise a venture fund together to sort of as the first third-party fund as part of the family office. And then the Persefoni idea came along, and we just had to go do it. And so they funded us. So I probably had the luxury of it being the easiest seed pitch ever. But you could argue I put in years of work with the relationships I had with those guys.
Yeah, you were known, and like they know who you are, how you operate, how you think. Like that's a pretty de-risking. That's a pretty de-risked investment with respect to a seed investment, anyway.
For sure, and most of the credit goes to them. To be frank, they're incredible entrepreneurs. They've had exits over $10 billion in the past 10 years and built everything from scratch in the energy space. So
they're operators. They're
operators to the core to this day. That was in 2020. And we actually structured the seed as a convertible, which just helped all of us kick the can on pricing down the road. And then it was in the spring of 21 that we did the Series A. That's when we brought our first institutional capital in, a firm called NGP, which is a Carlyle fund, really focused on clean tech and energy transition. Had a long history with the Rice Investment Group. So, there's a through line as there is for you. Relationships are the end all and be all. And then, Classic 21, we had a chance to preempt our Series B almost immediately, and we did first close on the Series B in that summer. And that was with Prelude Ventures, which is a fascinating firm out of San Francisco, clean tech, climate tech focused, started by some of the Simons family that did Renaissance.
Oh yeah, Jim Simons, yeah.
Exactly, who recently passed away, unfortunately.
Right. Yes.
But brilliant family, some of the most important conservationists in the world, and they actually took a bunch of the family money and put it into climate causes across various structures, and one of those is a dedicated venture fund. And at that point, we also started bringing in some corporate venture capital. So we've had the benefit of, we have Japanese mega banks like SMBC on our cap table. Around that time as well, we built a really strategic partnership with Bain & Company, who's both an equity investor, partner, and customer of ours. Just a fantastic company.
Great investor.
Really great. And then, through line for us is huge focus on clean tech and climate by these investors. EDF is the largest renewable energy provider and nuclear operator in Europe. It became an investor. And a lot of smaller sort of private venture funds with a big focus on this. And then our our sort of second big close that was unexpected is TPG had just formed the next fundraise of their what they call their TPG Rise platform, which is their set of ESG and climate funds. I mean, these guys are probably the most forward-thinking, climate ESG investors on the planet, and that gave us an opportunity. The Series B was $50 million. We then doubled it and expanded the raise to $100 million by that October or so.
All in, how much have you guys raised over that period of time?
That period of time was about, all in, we were probably 110 at that point, and we've raised about 175 today.
Oh, congrats! That's amazing. Congrats on all the progress. All right, let me start to wind up our conversation. This has been really fascinating. Oh, I had one more question about the company and the product. I know nothing about carbon credits, but are you doing anything in the area of trading carbon credits or like creating a market for this? Because obviously, if you understand, if you're in the flow here, there must be additional like economic opportunities for you just through the data that you're building here.
Yeah, we're not. It's a fascinating space and area, and it's a great example of our primary competitor has done exactly that. And frankly, they bilked a lot of their customers and took these credits and put way too big of a margin on top of it, and now people are pretty angry because they realized, that was not the true market price. For us, we stayed out of that because we saw a pretty big conflict which we weren't ready to manage properly. Meaning, if I tell you what your carbon footprint is and I'm the responsible accounting party, I probably shouldn't sell you that on the back end.
It's hard to be independent, right?
Exactly. Now, there's ways to do it, right? And so we have always explored that because our influence in our market has grown substantially, and we do believe the carbon markets are an incredibly part of climate, solving the climate crisis at scale. So we're thinking about it actively. We look at like the investment banks or law firms and the big four and how they segment conflicts. Today we're not doing anything. We are, continuing to look at it because it's a critical part of how you start ultimately reversing climate change.
That's right.
That'll be the end all.
So earlier in the conversation, you mentioned the nuttiness of company building. What are some of the lessons you've learned as a founder and CEO? So you start a company. I know you'd started a previous company before, so it wasn't your first rodeo. But what are some of the lessons learned? Like, what did you get right, and what are some mistakes you made? If you look back on those period of time, and like from the early days, any lessons learned on things you did right and things you could have done better?
Yeah. It's been a heavy topic recently, but I love Paul Graham's Founder Mode, blog posts. I'm sure you've read at this point.
Oh, yeah.
And, the piece that stood out to me in there was sort of that whole professionalization of management sort of construct, right? Like, we all get inundated with the advice that, hey, you're going to take $100 million in capital. Like, we better see some big logo hires. Like, go spend the money on, that big VP of product or whatever it is. And, we've seen logo hires in our space just have not played out. That doesn't mean, some folks didn't come from, big logo shops that aren't really great contributors in the business. But as a whole, that mode of operating when you're a professional manager coming into an early stage company, it just does not work. So I think that's been a big lesson. So big focus on homegrown talent for us, even into the senior leadership roles. At this point, I'd rather have somebody in senior leadership that has high capability, high trust, high loyalty, a maniacal work ethic, but doesn't know a damn thing about their thing. Because we have a network and we have resources from our investor group, from us, we can get to whatever knowledge and data that we need. So that's been a standout. And, I think we're seeing a necessary correction in that, because if you've spent 20, 30 years in a corporate career, it doesn't mean that you don't have the right mentality. It just means you probably don't have the right skills, and you may not be in the right place in life to be able to do something as all-encompassing as building a company.
Yeah, I completely agree with that. By the way, I don't want to provide yet more commentary on Paul Graham's essay here. I do believe, and many of other people have said this, I didn't invent this, but I think a lot of the points in that essay were, to those of us that have operated, somewhat obvious, in part because we've made mistakes in that area, but also insightful in that, like exactly what you said. It's easy to, I think a lot of investors have maybe not been constructive for founders by saying, go hire the big logo hire. I mean, that's terrible advice, often, not always. So it's interesting, but Let me ask about what did you guys get right? I mean, clearly you identified a market early, but are there you've got the right capital, you've got the right focus. It seems you've gone global. I mean, that's got to be hard in and of itself. But what are some things you got right in the early days?
It was the three things we laid out. We got all three of those things right. So, because we invested more aggressively and just had a leadership team that to this day, I still design every UI that ships into the company, and it'll remain that way until, until this thing is done one way or another. And so that's sort of at the heart of founder mode, right? Is one of those items is a founder that's very product oriented and, has seen that from the beginning to the end. Our product is undisputedly the best technology and IP in the space, right? And that's sort of readily acknowledged.
Are you chief product officer too?
We don't have that title in the company.
Yeah, because of you. Because of you, right?
Exactly.
If you weren't who you are, you probably would have a kind of a product leader at the executive level. Is that a fair assessment?
Exactly. Yep. And look, there's a lot of things I don't like about Elon, but one of the things that he got right and continues to do is he's in every product detail at every one of his companies all the time, right? I
wrote a post on LinkedIn last year called "Micromanagement is Good," and it was my take on founder mode. But I agree with you. Being in the details, particularly where your super skill is. I've met with founders who want to peel off the thing that they're best at, and I've said, why do you want to get rid of that? I understand not wanting to be head of finance anymore. Because that's not your thing. But if you're the best sales leader, maybe we ought to have you maximize your time on sales or on products. So I agree with respect to Elon too. He's a remarkable entrepreneur. You could argue the greatest entrepreneur in the history of humanity, regardless of what anyone thinks about his politics or anything else. And it's because he's in the details of the product. So I think that's a really good insight.
Yeah, and you've seen this, right? Like I remember vividly, I had one of our investors, both in the investment process and after closing, just kept wanting to see org charts from me. So why do you want to see org charts? And I said, I got to see how it's structured, right? Like we should put a hire here, and you should offload this and that, and like to this day, things that are starting to become obvious, and founder mode is just giving a name to what founders have done for a long time.
That's
just
right.
Craft their own path and in their own image. Like Jensen is famous now for Jensen doesn't do one-on-ones with his direct reports, and he's got 50 of them, right?
Yes.
I've never done one-on-ones with my direct reports in terms of like structure times. I just call people all day, every day, and it doesn't matter what your title level is, right? So yeah, I'm really happy sort of the conversation's happening. But to your point, it's not new, right? It's just been given a new name. Micromanagement, you're absolutely right. It's just a way to sort of tarnish a thing that's actually a very powerful thing when you have the right person do it. And like all things in life, none of these things are good or bad. They just have to be applied the right way.
Well, I love what you said about building a company in your likeness and image. Like everything is contextual. Your experience, your focus, your passion, your drive, and the team you hire also brings their own context. That team comes together. So I do think a lot of us I think there's so much to learn from consuming other content, but we need to create our own context and live in our own context. So I love that insight. That's when someone says, how should I organize? I usually answer that with a question. Well, tell me what's going on in the business. Like, what problem are you trying to solve? And I think that gets lost on a lot of first-time founders, that how you organize or a sales process or anything else. And there certainly are lessons to learn, but it's got to reflect exactly what you said in the likeness, image, and I think strengths and context of what the founder and their overall team looks like.
Yeah, and I think some of that, I talk to my team frequently, is like, get rid of the sickness that is corporate America when you come to the company. And they go, what does that mean? And I say, things as simple as like, what does mentorship mean to you? What does advice mean to you? Right? The de facto posture is like, get advice and get mentorship. And I like how you said it, is like, consume content. That's what I tell my team, is get information, data, opinions, and perspectives, but don't sit there and take advice. Like, nobody can give you the exact purpose-fit decision for what you need to do. And somebody giving you advice sort of is often interpreted as, this is what you should do, is what you need to do. you should make those decisions yourself. And coming back to that whole mentorship concept, right? Think about like corporate America has been afflicted with this concept of if you want to develop in your career, you need mentors. But sometimes you need a coach. Sometimes you need friends. Sometimes you need other things, right? Mentors are one part of the toolkit.
I love that.
And, you got to look at these things more holistically.
I love it. Anything we should know about Persefoni before we wrap up with my favorite closing questions, which I did not preview to you?
Yeah, absolutely. When we incorporated the company in 2020, we incorporated it as Persefoni AI Incorporated. And, I'm so excited about, the last couple of years since GPT really has come into its own and Transformer Technologies are where they're at now. And we incorporated the company as that because we wanted that enshrined in its identity. And this is sort of the pro and con of building a system of record. Not a whole lot of AI you can do in the early days because you need a large data set to do that.
Yeah.
But that's really the next epics of our company. Right, we're coming up on our 5-year anniversary. The next 5 will be all about how do we unlock the value of now a very scaled data set that we have. And so that's the next chapter for us.
Can you give us a sneak peek into what's an example of how you might be using generative AI to, like, now that you've got all these customers and a bunch of data here and you're global, how are you going to be using that as a sneak peek here?
Yeah, we're announcing another capital raise soon, and one of my sort of cheeky lines in the fundraising process has been, I'm very proud that we accidentally built an LLM. They go, what the hell does that mean? And I said, well, we've always been hyper-focused on achieving top quartile SaaS margins, and so that meant we invested a lot into our support function and documentation. So our knowledge base has 800 plus articles that are all uniquely authored by us, and it's everything from technical guidance on the accounting standards all the way to how to use the software. And that meant that knowledge base became an LLM. It's the only LLM that we know of that can speak carbon accounting. And so we launched Persefoni Copilot in March of this year, and it can answer tier 1 technical support queries.
Do you call that the Persefoni Copilot? Is that how are you marketing this as a product there?
Yeah.
Is it a product you're selling, or is it just included in the feature set? Because that feels like someone could get, now not only have the data, they've got an assistant now to really understand what's going on in their data and in their company.
We're including it in the base. There's no plans to skew it separately. Some of that is, I pay a lot of attention on model accuracy and sort of value creation out of that. So, if you look at the chatter sort of starting to pick up at like Google Gemini and Microsoft's Copilots, like a lot of people are very underwhelmed at what they're paying for, and I don't think they're going to renew some of those. One, we don't want to end up in that situation. 2, when the value really accrues to being significantly higher than it is, we'll probably just keep it in our base subscription, because I think that's just the future of software. Like you got to just have this stuff in here, and if you're trying to charge for that separately, 1, I think you're probably missing an opportunity to differentiate from competitors, and 2, value maximization for us is super important for our customers.
I love that. I also think sometimes, maybe an analog here is that people used to want to charge for a dashboard or like some visualization of your own data. I'm going to charge you to visualize your own data, and then those things have gotten bundled into products more over time. This is probably, some of these copilots are probably going to look more like that over time, is my guess.
Agreed. Yeah, and I do think that is the next future, right? Is truly generating visualizations and insights. Not even on queue, but just on on data ingestion. That's what we're really focused on. I think it's a couple of years out to get to some of that, and some of it's the classic GPT challenge of you don't want to overinvest into some of these things because one update happens and they've all been automated. So yeah, it's a fun area to be in right now.
Hey, well, congrats on all the progress, and it's amazing to see Persefoni, and I'm glad you're building this company right here in Phoenix, Arizona. So congrats on all the progress. 2 closing questions I like to ask. First is the most important one. What's something you're thankful for in your life? What's something that you're most thankful for in your life?
It's definitely my family, and it's both the one I was born into and the one I've chosen along the way. So, my wife and daughter at home are just incredible humans, and that's what makes the world tick. And I know you've got a big and vibrant family as well.
You gotta have people, and you gotta love your people. I love it.
And like my team at Persefoni, includes almost all of my best friends, and that's fantastic. And I'm super, super grateful for that. And that's number one driver for me.
Any pros and cons to working with your best friends?
For us, it's been pretty damn clean, I've got to say. I think part of that also too is we've also just been very clear on how we operate the businesses, and for better or for worse, like I'm number one, and that's not because like I have any ego or like have a need to be number one. It's just that's where my skill set has fit, right? I've done a CEO job now for 6 years, and our team is incredibly aligned in. We have disagreements, but then we just commit and we get aligned, and that means we get things wrong, and then we have to fix them. It's I would say maybe it's not necessarily about the pros and cons. It's just knowing that it creates incredible moments over epics of time, but it also creates challenges and friction along the way.
I do think that the power of the process of disagreeing, creating alignment, and moving forward in a unified way, like that process is a superpower. And there is a shorthand to that. If you've got strong personal relationships, like your friendships, it allows you to debate in a way that's less personal, but it's like highly constructive. And I think people miss out on the opportunity to really get into the details of debate from a multi-sided argument. So I think that is probably a strength in having smart friends that you can debate something with and then drive to alignment. Is that fair?
It's super well articulated, right? Yeah. Like one of the things we always say is like we can clock anybody that's not in our circle of the difference of everybody in the circle cares about getting it right and not being right.
Yeah,
and
I love that.
That's kind of what you just said, right? Is like you can have those objective dialogues because it's just about the virtue of the work and the performance and the output. And I'll say the other thing that I think we got really good over time is when it's friend time and it's friend engagements, we're all equals. Like it's we hold each other accountable. Friends are friends, but when it's work time, like we practice a very undemocratic style of company management and leadership. Opinions and voices are incredibly important. Those are the perspectives and data, but we don't distribute decision making. We've never done it. We want people to make decisions fast and furiously and in a unified way, and that's really helped keep everything on point.
I love it. All right, last question. Where is the best place in Arizona to get tacos? I'm secretly curating a list from founders about where to get tacos in Arizona.
This place is so good that I know exactly where it's at because it's my regular taco spot, but I don't even know the name.
All right, tell me the cross streets.
All right, it's in Chandler. It's off of, I can't tell you the cross streets because I just...
Like off the 101?
It's off the 101. It's probably 3-4 cross streets over. I'll have to follow up.
Okay, well, we'll follow up. We'll put this in the show notes here too because I'm really curious. I'm going to be driving up and down the 101 in Chandler trying to find
we'll make sure
3 streets over, to do that. So, hey, Kentaro, thank you so much, and thanks for the wisdom you've shared with people on this podcast, and congrats on all the progress. It's fun to see, and I'll be looking for my invitation to participate in the next round soon.
Absolutely. Thanks for having me, and thanks for everything you're doing here for the local community.
Hey, thank you. Appreciate it.